The Commodity Channel Index, or by its acronym, CCI, is a well-known but very little used indicator. It is an incredibly versatile indicator, especially for scalping strategies. Although it was originally designed for commodity markets, its ability to measure when the price is overbought or oversold makes it ideal for knowing when it is a good time to buy or sell in any market, including currency pairs and forex. In this video, I will teach you how to make use of this indicator in a more advanced way, and I will show you the strategies needed to succeed mainly in scalping, using this indicator like a pro. So let's get started. First of all, how does the CCI indicator work? The CCI measures the deviation of the current price from its moving average and then compares it to previous deviations. In other words, it first calculates an average line of price movements, then measures how far the price is away from that average and compares that measurement to previous measurements. Graphically, the average line is plotted with the center level 0. The deviation level is the main line of the indicator, and the 100 and -100 levels are the average high and low levels. So, if the price deviates more than normal from the average line, the indicator falls outside the range of the 100 and -100 levels. This means that the price is overbought or oversold and could experience a countermove, moving back towards its average. Now, having this clear, let's move on to the strategies. First of all, you need to add the indicator. It is as easy as looking for it by its full name, Commodity Channel Index. All platforms have it. As I mentioned before, these strategies are focused on scalping on a 5-minute time frame, so we have to make some small adjustments to the indicator. To the length of the CCI, we adjust it to 9 periods so that it adapts to faster price movements. To the indicator bands, which by default have a value of 100, we adjust them both to 150 to increase the probability of reversal in those zones. And finally, we deactivate the moving average based on the CCI because we will not use it. Reversal strategy. This strategy consists of identifying extreme levels of the CCI indicator. When the CCI crosses from 150 down, we look for selling opportunities, and when it crosses from -150 up, we look for buying opportunities. To confirm these signals, we use reversal candles such as doji and hammer. Our objective is to capture 5 to 10 pips with a risk-to-reward ratio of at least 1 to 2. Making sure to place a stop loss at half the distance of the profit target. Breakout strategy. During periods of consolidation, wait for the CCI to go from near zero values to over 100 or -100 quickly. The logic behind this strategy is that when the CCI breaks these levels, it indicates significant strength in the direction of the breakout. Coming after a consolidation stage shows us which trend ended up winning. To enter a position, buy if the CCI breaks 100 with a strong bullish candle, suggesting a strong uptrend, or sell if it breaks -100 with a strong bearish candle, suggesting a strong downtrend. Divergence strategy. This strategy involves looking for divergences between the CCI and price. Divergences suggest that market momentum is slowing, which could indicate a possible reversal. If the price forms a higher high, but the CCI forms a lower high, look for selling. If the price forms a lower low, but the CCI forms a higher low, look for buying. Validate these signals at key support and resistance levels to increase the effectiveness of the strategy, as these levels are often critical points where the market can change direction. We can also use a moving average to help us filter out the main trend. A 100-period EMA works great because it is slow enough to identify the general direction of the market without filling us with false signals. Is the EMA going down? We only look for buys. Is it going above? We focus our trades on sells. It's a simple way to align scalping with the trend and increase the probability of getting it right. By the way, avoid trading in sideways ranges because there the CCI signals can be less reliable.